Hey everyone, welcome back to Investment Research. I'm Simo, your equity research analyst, and today we're going to break down one of the most talked about biotech stocks right now, BioMarin Pharmaceutical, ticker BMRN. The company is heading into its third quarter earnings, and there's a lot of buzz about what could come next. So let's analyze its price action, fundamentals, and outlook to see whether this stock deserves a spot in your portfolio right now. As of today, BioMarin is trading at $54.48, down slightly by 7 cents or about 0.13% on the day. The trading volume reached a little over 2.1 million shares, which shows that investor interest remains strong as we approach earnings. The stock opened today at 54.48, touched an intraday high of 55.03 and dipped to a low of 54.19. For perspective, the 52-week range of this stock stretches from a high of 73.51 to a low of 51.56. So we are now hovering near the lower end of that range, which for many long-term investors could signal a potential buying opportunity if the fundamentals remain intact. Looking back, BioMarin's performance has been somewhat uneven this year. It's been under pressure since mid-2024 due to concerns about slower adoption rates for some of its key products and the broader weakness in biotech stocks. But at the same time, the company's long-term fundamentals remain solid, and that's where things get interesting. BioMarin is a biotech leader focused on developing therapies for rare genetic diseases, a segment that's less crowded but often highly profitable because of strong pricing power and long-term patient commitments. Last quarter, BioMarin reported revenue of $825.4 million, which was up 15.9% year over year and beat Wall Street expectations by 8.4%. The company also exceeded analysts' earnings per share estimates, which boosted investor confidence at the time. What made that quarter stand out was not just the revenue growth, but the balanced execution. Management delivered on both top-line and bottom-line performance, which is a strong signal in a market where many biotech peers struggled to keep margins steady. Now heading into the third quarter of 2025, expectations are more moderate. Analysts expect BioMarin's revenue to come in at about $778.3 million, which would represent around 4.4% growth year over year. Adjusted earnings per share are expected to be roughly 32 cents. That's a deceleration compared to the 28% growth seen in the same quarter last year. But this slowdown doesn't necessarily mean weakness. It's more of a normalization phase after several strong quarters of expansion and product launches. When we examine the chart, the stock has been consolidating in a narrow range between $52 and $56 over the past few weeks. This shows a buildup of investor indecision as traders wait for the earnings release to determine the next major move. From a technical standpoint, if BioMarin can hold above the 52 level, that could serve as a strong support base. A breakout above $56 might open a path towards $60 or even $65 in the medium term. However, if earnings disappoint, a retest of the 51.50 level, which is the 52-week low, could come into play. The key question now is whether BioMarin's upcoming report can reignite investor enthusiasm. Fundamentally, the company's focus areas remain strong. Its two most important products, Voxzogo and Roctavian, are both performing well. Voxzogo, which treats achondroplasia, a rare bone growth disorder, continues to expand its patient base in international markets. Roctavian, the gene therapy for hemophilia A, represents one of the most advanced treatments of its kind and could eventually generate billions in annual revenue if adoption accelerates as expected. The challenge for BioMarine has been the slow rollout of Roctavian due to the complexity of gene therapy distribution and the cautious pace of insurance coverage. On the financial side, BioMarine maintains a healthy balance sheet with solid cash reserves and manageable debt levels. This gives the company flexibility to continue funding its pipeline and support long-term R&D initiatives. Cash flow from operations has been improving, and management has reiterated its focus on maintaining profitability while reinvesting in innovation. For investors, that's an encouraging signal because it means the company is not relying on excessive debt or equity dilution to sustain its growth plans. In terms of valuation, the stock currently trades at a discount compared to its historical averages. The market seems to be underestimating BioMarine's long-term potential, especially when you consider its robust drug portfolio and the consistent demand for rare disease treatments. The average analyst price target remains around $94.80, suggesting potential upside of more than 70% from the current levels. While not every analyst will agree on timing, the consensus sentiment leans toward a moderate buy, with many expecting the company to outperform once the earnings narrative turns positive again. From a market sentiment perspective, biotech as a sector has been gaining ground recently. Over the last month, biotech stocks have risen by roughly 7.7% on average, while BioMarine itself gained around 2%. This indicates a cautious but growing optimism among institutional investors. The fact that BioMarine will be the first major biotech to report earnings this quarter adds to the anticipation, as its performance could influence sentiment across the entire sector. So, what should investors watch for in the coming days? First, pay attention to the company's revenue mix. Growth in Voxzogo and Roctavian sales will be key indicators of momentum. Second, monitor any updates about new approvals or expanded indications for existing therapies. Third, look for commentary on cost control and gross margins, which can affect earnings power heading into 2026. In my personal view, BioMarine is positioned as a high-quality biotech stock that's currently undervalued due to market overreaction and short-term uncertainty. The fundamentals are strong, the science is real, and the growth potential remains intact. For long-term investors, these levels could represent an attractive entry point, especially for those with a medium to high-risk tolerance who understand the nature of biotech cycles. If the upcoming earnings show steady progress and reaffirm management's guidance, we could see renewed momentum and a potential shift in sentiment. But as always, patience is key in biotech investing. Volatility is part of the game, and strong hands tend to be rewarded over time. That wraps up today's analysis. I'm Simo, your equity research analyst, and you've been watching Investment Research. If you found this breakdown helpful, make sure to like the video, subscribe for more in-depth market updates, and share your thoughts in the comments. Do you think BioMarine will beat earnings again, or will it face more pressure this quarter? Let's discuss it below.